Welcome to the company update for Altona Mining at Commodity TV. It looks like that the success story of Altona Mining moves on and continues again. Dr. Alistair Cowden rang the bell for the next round with signing the Little Eva Cloncurry deal with the Chinese SRIG group last week. Through the participation of SRIG for 66% interest in the Cloncurry project for approximately $214 million, the financing happened without any dilution of shareholders nor any debt. Altona contributes $25 million and the project for the future Little Eva mine for 34% interest. Around 40,000 tons of copper and 17,000 ounces gold per year shall be produced from 2019 on for at least 13 years. Well, who is the Sichuan Railway Corporation called SRIG? SRIG has the head office in Chengdu in the province Sichuan in China. The company is state-owned of the province Sichuan and works in the sectors of engineering and construction with a focus on large infrastructure projects like bridges, dams, etc. and more. In 2014 they had revenues of $6 billion. Moody's gave them a stable AA+ rating in January 2016. SRIG is a financially strong partner and expands their business straight into mining. Altona's cash is easy enough to pay for their share in the project. Interesting for shareholders is that the company wants to pay out at least 50% of all cash surpluses to shareholders in the future as a dividend. The Cloncurry project with the future mine has already 1.6 million tons of copper resources and over 400,000 ounces of gold. The future exploration gives enough room for more. The Cloncurry project within the Mount Isa area is a large mining center with a very favorable infrastructure like railway, gas, power supply and good human resources. In addition to the world-class mineral field, the project is only 7 kilometers away from the $750 million Australian Dugald River zinc development. The Little Eva mine is a standardized 7 million tons per annum facility with a fast flotation and coarse grind. The bulk mining will be done by contractors. The recovery stands at very good 96% for copper and 85% for gold. This produces a clean concentrate of 25% copper and 4 grams gold per ton. The concentrate has no impurities like arsenic or uranium. The open pit is 1.3 kilometers long, up to 370 meters wide and 240 meters in depth. The mining permits are all granted and the environmental authorities are on site for last amendments. All native titles are in place and the definitive feasibility study is completed. The initial mine life is 13 years and shall be expanded well through the optimization at today's cost and a further 800,000 tons copper resource, which are not in the DFS contained. The capex is planned at $294 million Australian dollars and are well covered through the $329 million Australian dollars cash now in the joint venture company through the transaction. In addition, there should be some saving potential while building the mine with the lower equipment costs in today's prices. The EBITDA shall be at $117 million Australian dollars and the NPV at $346 million Australian dollars. The C1 cash costs are planned at $1.65 US cents per pound and the all-in cash costs at $1.96 US dollars per pound. We see here also good potential for lower costs through the low oil and fuel prices, steel and also lower wages. What might be a fair valuation for Altona? Well, Altona's share of the cash and NPV equals to $224 million Australian dollars or 42 cents per share. The share of the EBITDA stand at 40 million Australian dollars, which would result at a PE ratio of 4 in a possible market cap of 160 million Australian dollars or 30 cents per share. The production share in the future is for Altona 15,000 tons copper equivalent per year. Altona's today's share price around 12 cents gives nice room for higher valuation in the future as Little Eva is now a done deal and today's copper prices are at the market bottom and shall be much higher in 2019 when the production starts. Thanks for watching us. Bye bye from Munich.